Welcome to Specialist Lending Solutions Television. I'm Victoria Hartley, Group Editor of Specialist Lending Solutions. Now, I'd like to introduce our guest, first of all, today, Andrew Ferguson, MD Buy-to-Let at West One Loans.
Hi, Vicky. How are you?
All good, thank you, Andrew. Thank you so much for joining us. Lovely to have you with us. Now, West One's buy-to-let proposition went live originally in June 2019, and as an offering was just starting to bed in as the pandemic hit just over 9 months later. So to my first question, Andrew, West One had geared up, it launched, you had huge plans for the buy-to-let side, but how did this impact your plans?
Yeah, look, there's no doubt that the pandemic put a pause on things is probably the best way to describe it. As you alluded to, we'd gone live to the external market in June 2019, initially through a small select group of master brokers and some direct brokers as well. We'd recruited a team, albeit at that stage relatively small, and we'd got the foundations in place really for really beginning to kick on in 2020. So when March came and COVID started to impact, there's no doubt that it did slow things down. So we did put a hold on some of our expansion plans at that point. But what we did do was continue to plan in the background for, assuming that things came out the other side and a much more positive environment came in the future. So we continued to lend throughout the initial lockdown, even when the property market grinded to a halt in terms of valuations, etc. We stuck with our existing pipeline, and a small number of new cases were coming into the business at that time as well. But with our, what I would call our interim COVID criteria, which was obviously a lot tighter during lockdown one, when there was still a lot of uncertainty as to how things were going to look and how long things were going to last. So we got through those initial months just with more from a planning behind the scenes perspective. And, I think as the months went by, we gradually saw slightly more optimism, and we reintroduced certain elements of criteria from sort of May onwards. We then clearly saw the sort of tiering system in the autumn and lockdown 2, as we call it, at the back end of the year. But I think things were very different then, because when lockdown 2 came, we'd had the experience of lockdown 1, and we'd also seen the impact of the positive vaccination news at that point, which looked as though the end was in sight and a solution would be available, as was the case as well with the property market remaining open, which was very different from lockdown 1. So I'd say from a late 2020 point, we internally started to reinvigorate our discussions around growing buy-to-let. And in fact, probably because of the fact that we saw it as a really strong asset class, as was evidenced in the pandemic, our book stood up really well. We had very small numbers of payment holidays requested. I mean, at the peak of the market, what was 1.8 million people taking payment holidays. We had a relatively small double-digit number. No arrears, Vicky. So I think all that sort of environment led us to believe that our plans to grow the business were still prudent and still sensible. So from that point on, we really have invested heavily to try and make sure that the proposition that we build, makes us a really credible and significant player in the market. So some examples of that would be that we have upgraded our broker portal functionality significantly now to make it a much easier and seamless case submission experience for the broker. We've also amended our system so that we can deal with a much broader distribution base. So initially, when we first launched, it was nearly all through master brokers and some direct firms, but we extended our system so that we could accommodate mortgage clubs and networks. And finally, we've had a real uplift in terms of staff resource so that the business is geared to give that strong service. So we had 4 underwriters at the back end, purely for buy-to-let that is, at the back end of 2020. As we sit today, we've now got 11. So we're much better equipped to process cases. We had a sales team of sort of 3 individuals at the back end of 2020. We're now at 8. So when you sort of factor in the system enhancements, the staff infrastructure that we've now built, the distribution capability that we've now added, it's really helped us get the business back on a really positive footing. And we've seen over the past few months real growth within the business. And we have, we're really excited about it. It's a good quality business that we're seeing. And a lot of the anecdotal feedback we're getting is that people really like the sort of property market expertise, the speed, the certainty of decision, as well as the broad-ranging product set that we've got. So our plans are definitely to really grow the business this year.
So buy-to-let is seeing one of the busiest starts to the year for some time and is being called a mini boom by some. The sector actually escaped the Chancellor's attentions in the March budget with no capital gains tax hike or serious changes of any kind, which is very welcome. And with the stamp duty extension also offered to landlords, it's been a strong start for the sector. How do you expect pipelines to hold up in H2, though, Andrew?
Buy-to-let has been remarkably resilient throughout the pandemic, and the start of this year, as you said, has been really, really strong. Interestingly, even in last year's environment, the market ended up around about £38 billion of lending, and I think the latest forecasts for the year ahead are stronger than that. So we're looking at 40 billion this year and potentially a bit more than that in 2022. So we, like most of our competitors and other lenders in the market, are definitely seeing a real demand for buy-to-let so far this year. And I think that's a mixture of the pent-up demand that was possibly seen as part of the pandemic. As you rightly mentioned, the stamp duty holiday that has been extended till June. And we are definitely seeing the sort of larger scale landlords that we deal with using this as an opportunity to try and increase their portfolios. So the signs are one of buoyancy in the market, which will be fueled by the fact that this year we have a significant number of product maturities. So the remortgage market, which last year with the pandemic was probably over 75% of the market, I still think will play a major part in this year's market. So we expect a busy time of it and are seeing that already this year.
West One Loans has launched into a very, very competitive specialist lending market with buy-to-let. So what gaps did you identify, Andrew? How are you seeking to stand out as a lender with plenty to offer brokers?
Thanks, Vicky. Yeah, look, I guess there's two aspects to that question. And the first one being about the very competitive landscape that we find ourselves in. I think whilst that is true, and there's definitely a lot more entrants now in the specialist sector than there was a few years ago, it is the one element of the market that is growing exponentially. So although the market overall for the year ahead is likely to be about 40 billion, depends who you speak to, Vicky. The size of the specialist pie will vary in opinion from different lenders. But our view is that overall, it's probably about half the market, with the addressable segment of that market that really applies to West One is probably more like the £10 billion level. So we do feel that the growth in that market segment means there's enough room for us as well as others. I think the key elements of the market are growth in areas like limited company lending, more niche areas of market like holiday let and expat lending. Landlords are obviously seeking property types now that are higher yielding, so you've got a lot more opportunity in HMO and multi-unit freehold blocks. And other aspects of the market, like we're definitely seeing a lot of interest from portfolio landlords with multiple properties that are looking to either expand their portfolios or refinance it. And last but by no means least, an area that is close to us because of our heritage in bridging we see a lot of bridging and development exits where I think the internal expertise and knowledge that we've built up over the years within the group mean that we're very well equipped to deal in those different market segments.
Andrew, thanks so much for that. Unfortunately, that's all we've got time for in this segment. So come back and join us for the next segment shortly when West One Loans shares more of its lending plans. We'll be back soon on Specialist Lending Television. Talk to you soon.